Hey everyone, welcome back to the Mike Rosehart Show. We're live again like we are every Wednesday to discuss anything you guys want to talk about with personal finance, real estate, whatever's on your mind, if your mind's on money. So, what have I been up to the last week? Well, today I went and watched a couple of real estate investors message me, and we went out and watched the new Matrix and the new Spider-Man. It was great. It was nice to spend a little bit of time to get away, and I turned my phone back on and I've got a million messages from everything from contractors to all the different issues and stuff that's building up as well. Almost sold 2 more properties today, which is sweet. I've been working on trying to sell them privately for the maximum price that I can get. I've got 8 or 9 properties left to sell, so it's great to slowly purge. Today I want to talk a little bit about where I think I'm pivoting to. So I'm selling my entire real estate portfolio here in London, Ontario, pending, or I guess all except for, or notwithstanding, my primary estate, obviously, and one of my rentals, which has a really great mortgage that I don't want to break out of. So I'll be pivoting all of that capital into a few flip projects here locally still with some hands-on partners, as well as I'm extremely interested in places like Florida, the Bahamas. I think I'm gonna make my way down south, probably move to Florida, but then maybe to the Bahamas. I don't know, I haven't decided yet, but there are some huge tax advantages to getting out of Dodge, to getting out of Canada. And it's becoming increasingly interesting to leave. So I probably will end up in Florida to start, but I like the proximity of the Bahamas to Miami, it being a 45-minute flight, or it's like 50 miles. So, by boat or by ferry, by private plane, you can have a place in Miami or Fort Lauderdale and then just travel over to, one of the northern Bahama islands. There's some interesting stuff there with paying zero tax, right? As you build, significant amounts of wealth, paying no tax means a 50% higher return on your portfolio in some cases. So very interesting. Very, very interesting. I like luxury real estate just in general. Like I just enjoy looking at luxury properties. I enjoy that whole process of finding a deal and getting it onboarded and all of that kind of stuff. I don't enjoy the operational stuff, so I'd have to find a local partner if I'm going to blow up stuff in Florida. If you know someone in Florida, there's an excellent Airbnb manager who has that that gift for staging and that gift for customer service and that. Reach out to me, link me up with someone. If you also know wholesalers down in Florida or the Bahamas or agents, link me up. Lots of agents find off-market pocket listings. So I'm probably gonna go to Florida the next 2-3 weeks. I'm gonna drive over and spend some time down there. I mean, maybe a month or so, and do some logistical groundwork. So that'll be interesting. And life's been good otherwise. Been just struggling through the renos here at my house and getting properties ready for sale. It's a lot, it's not easy. Hey Bill, how you doing? Raj says, do you buy and hold crypto at all? The only crypto I think that it makes, buying and holding crypto makes sense. And I think you could, depending if you trust giving your keys away, you could also stake your crypto, right? You could own Bitcoin or Ethereum, and using a layer, you could stake it and get a passive income by holding. I am bullish on ETH. I am bullish on Ultra. I am bullish on Bitcoin, of course. Am I gonna have my whole portfolio on that? No. I think it makes sense to diversify, and it's an asset class that's interesting, especially in these crazy inflationary times where governments are spending more than ever before, and there's huge deficits, and who knows the future stability of some of these fiat currencies, right? The US dollar, Canadian dollar, who knows, right? Bill, how you doing? Seema, hey, how you doing? Seema says, how are you, long time? Good, I'm doing well. As far as content for today's stream, it's literally whatever you guys want to talk about. I just wanted to quickly come on here and I titled it Florida, and Bahamas real estate, because I'm hoping that someone watching this is interested in Florida as well, and maybe there's some way we can partner up. If they wanted to be maybe the capital, or maybe they wanted to be the on the ground, boots, or maybe someone in those areas. And so that's what this is titling this video is maybe you know someone. And if you do, connect me. I'm currently on shadow ban on Instagram, but send me a message. It'll just say I violated the community guidelines. It's hard to tag me, hard to find me. I shared several posts related to, one of them was related to communist and fascist ideals and the parallels between our current government systems and some of the fascist previous governments, and that got a shadow ban by the opinion of Instagram. That's misinformation. It was a quote, so I don't know how an opinion can be misinformation and then removed. And the other one was sharing someone else's post, which talked about some of the negative side effects of vaccines and long COVID and all that. And the narrative currently is like, get your shot no matter what. There is no informed consent. There's no benefit or cost discussion. It's literally like, get it or we're gonna throw you in prison. It's like that skit, if anyone's ever watched it, it's like, I think it's Argentina, and they're like, speeding, jail. Too slow, jail. Speed limit, jail. Whatever you do, right to jail. It's a lot like that. I am pro-vaccine for anyone who wants to take it. I'm just not pro-vaccinating children, unless the children have, you've analyzed the cost benefit, and there's almost no benefit for children. You could make an argument it's going to save people around them, maybe. There's just not a good argument to protecting children for something that isn't going to hurt them. And then introducing things like myocarditis to these children at higher rates than the COVID is. So the COVID would actually be a better way for them to get protection and safer. So it's a line that I've drawn in the sand for kids. I think that adults, it makes a lot of sense, especially if you're an older adult or an at-risk adult. Yeah, I mean, the cost benefit is there. There is some risk, right? There's some cost potentially, but yeah, so find me on Instagram, if you can still find me. I'm on shadow ban for 90 days, but that'll end. So I'm going to continue to speak my mind and continue to share what I feel. And, maybe I'll get censored in the future. Maybe I won't. We'll see. But reach out to me on Instagram if you're interested in linking up and doing anything down there. Joe says, hi Mike, if you could recommend 1 or 2 neighborhoods in London to an up-and-coming real estate investor looking to scale and reach fire, what would they be? It depends, right? I can't say there's one neighborhood that's like, objectively better for your goals. Like the slums in London, if you're talking about like terrible areas to invest, in East and pockets of just south of downtown, there's Soho, and in east of London, like east of Adelaide, there's some horrible pockets. The Ham and Eggs, Hamilton and Egerton area is a little bit rougher. There's some really bad areas in Dundas. Horton has some really rough areas on it too. Those are rough areas, but the cash flow is fantastic. You're dealing with shit tenants, shit properties, in shit areas, but the cash flow is better to compensate you for that. Your cap rates might be 50% better. You could find some really great depressed deals that you could gentrify whole streets if you were to focus on flipping a few in that street, right? Or acquiring a few buy and holds. So that could make sense if that's part of your strategy. When I started, I looked for only location. So my first 10 properties were only in West London, west of Richmond, even west of Warncliffe. Every single property I owned was west of Warncliffe. I was very bullish on North and West. They're quality areas. Interestingly, pockets of East appreciated at 30 to 40% faster rates. The slums appreciated faster than the proper A+ areas. That happened in London over the last 5 years. So is the better area necessarily better as a return on investment? Maybe, maybe not. I like location as I think A+ location is better and A+ tenant is better. I'm going to lose some cash flow for that. These days, I don't know. Some of the property sales I'm seeing are just, there isn't a lot of cash flow. People are paying pretty close to top dollar for these properties. And so it's interesting, to say the least. The market isn't the same as it used to be. And we're getting to a point now where at some of these valuations, these properties are selling for in the MLS, there is no cash flow. If something goes wrong and a tenant destroys a property, you're out 2-3 years cash flow in some cases. And so you're running this property, this business, for years, making nothing, hoping on appreciation. And that's not really the type of investor I am. Like, I'm not a hope and pray kind of guy. I'm not a speculator. I prefer to be investing in businesses that produce cash flow, especially if I'm going to put my time into it, right? So I'm not against real estate. I just think that you know, rents haven't come up enough to justify the current house prices. And if rents were to come up further, I don't know who could afford to pay them. So it's hard. There's a bit of a ceiling unless we go through another bout of hyperinflation and then wages increase, right? They're talking about a $20 minimum wage. I've heard that floated. So could that happen? Maybe. If that happened, it would drive real estate prices up for sure, because rents would get driven up, and rents drive real estate prices up. That's just how it works. They're a function of each other. Yeah. So I personally like quality areas like, if you're looking for a Western property, I think the most affordable area to buy a Western student rental is at Oxford and Western Road, right where Western becomes Warncliffe. That whole area is called like Oxford Park, Blackfriars. Those areas are just like, you can walk to downtown and you can walk to Western. It's further walk to Western, but it's much more affordable than say the Richmond Gates. The Richmond Gates is a premium to be in Old North and in that whole area, and it's just not justified. The rents aren't any higher. It's just properties are 25% more expensive there. So I don't know. There are pockets I like better than other pockets. There are pockets that are for sure overpriced. Richmond Gates, horrible. One of the worst pricing in the city. Near Masonville, a lot of the properties there are at a point where there is no cash flow at all. So it makes no sense to buy there. If your goal is cash flow and to actually make money on a monthly basis. If you're just speculating, you could do new builds in North London or West London, and you do new builds anywhere and speculate, right? So it depends on your strategy. Yeah, there's no right way to do anything. Bill says a lot of Canadians are investing in Belize. Interesting. I don't know. Belize is kind of far, to be honest. The thing that I like the most about the Bahamas is it feels close and safe, if that makes any sense. So like the Bahamas, the main language is English, which I am extremely proficient in, right? I have, an edge there in that sense, right? Location wise, I could literally get in a rowboat and in one long day I could row to the US. That makes me feel comfortable. If shit hits the fan and the world goes into like, whatever, I don't know. I just feel like I feel comfortable if I can boat to civilization. If I ever want to go, to a fancy restaurant or enjoy the amenities of the United States, Miami and Fort Lauderdale are not far. Whereas like Costa Rica or like Saudi Arabia, I gotta go so far on a plane. If there's a lockdown, what do? Right? Like, I don't know. Proximity wise, Bahamas is a zero tax place where it's extremely stable, top 10, we'll call it second or third tier country real estate markets. Very stable, very strong market there. Lots of international private bankers go there, lots of musicians and celebrities. There's just a lot of wealth there. Yeah, it's interesting. I feel like there's definitely opportunities between doing business in Florida and the Bahamas, going back and forth with primary residence being in the Bahamas. I don't know. Right now, that's where I'm leaning to be in the next 5 years. That's on my 5-year vision board, is to be spending, 7 months a year in the Bahamas. I still want to travel 4 or 5 months a year. I don't know where I'll be. Probably back in Canada a little bit, traveling all around the world. I'm hoping this COVID variant bullshit ends and we can accept that it's a common cold. We all vaccinate and the world goes on, right? Or we don't vaccinate, we get immunity, whatever. Like, I want us to get back to normal. I'm willing to accept that, killing 1 in 10,000 is a flu. Like in 2018, 2019, we had thousands of deaths. Thousands of people were dying of the cold and flu. It was a bad flu year in 2018, 2019. And like, there was no mention of it on the news. Like, no one cared. Here, now one person dies of Omicron, and it's like, oh my God, the first death. It's like, unfortunately, I do not have COVID right now. I do not, unfortunately. Took a test just to be certain. Drink, my throat's closed over. Oh, sorry guys. Next question was from Eli. Is Questrade the best way for non-option investing for Canadians? No. Interactive Brokers, the best by far. Questrade is horrible in comparison. The margin rate's terrible. If you have a stock portfolio, you want to be able to borrow against it to buy a house or do whatever, or just lever up and buy more stocks. Being able to borrow against your portfolio cheaply is Interactive Broker's competitive advantage. Beyond the fact that their platform is better, beyond the fact that their fees are better, their interest rates are more than justified. So IBKR, hit me up if you want the link. I can send you the link. We each get like $50 when you sign up, or don't, like just sign up yourself. It's the better platform, hands down. I've used both. I have both accounts. I closed my Quest trade. Throat, I needed water. Trying to cough to get whatever's stuck in here out. Oh, luxury real estate is Jane and Finch. I mean, there are better places I think in the world than Toronto. I don't love Toronto. Every time I go there, the smog and the culture. But you're right, that is an expensive luxury real estate per square foot. Sorry, you said Jane and Finch. I'm dying here. Throat feels like it's closed over. I think I have a bout of something. My throat dying right now. James, thoughts on REITs that focus on rental properties to take advantage of inflation? Yeah, I mean, they're a great substitute for owning a real estate portfolio. REITs can do things at scale that you can't as an individual, and it's completely hands-off. If you were to buy a rental property and hire a leasing manager and a property manager and a project manager to manage the property manager, who will then manage the trades and the tenants and all of that, and you made it a truly passive investment where you didn't have to do anything. They took care of everything, including bookkeeping for you, everything. You would end up with a similar cash flow profile as a REIT. The only reason we make more with our rental properties is because we get actively involved. We invest our time and our energy and our skill set. We get a higher return. We're in control that way. At my stage, I'd rather own a REIT, levered up with Interactive Brokers 2-to-1. So then I'm, putting 20% down on a huge portfolio of properties. I would much prefer that diversification and that hands-off, economies of scale, quality management, right? Have you been to Naples, Florida? Yes, I have been to Naples. I've not spent any considerable time, but driven through it. That's some luxury real estate in Naples too, for sure. I need to spend more time in Florida and explore it more. I've been to both sides, and I've spent some time in Miami and all around there, and I've spent time in Tampa, and I don't know. I like Central Florida the most, only because I think that it's the safest from hurricanes. Like, if you're on either coast, you take a risk with hurricanes, right? So if I wanted to own property, I feel most comfortable being in Central Florida, right near Disney. But yeah, being on the coast is beautiful too. I don't know. I could be swayed with a good insurance policy. Have you ever considered investing in the Canadian cannabis industry? No, I haven't. I feel like it's pretty saturated at this point, and I'd be late to the game with no competitive advantage. So, haven't looked into it. When it was first legalized, a bunch of buddies did, and I talked with them about it, but I never got into it. So, missed the boat on that one. J Doe says, "Hey Mike, what are your predictions on the real estate market in Southwestern Ontario for 2022?" Oh, my throat is... I feel like I have a tad bit of laryngitis or something. Like, what's going on here? Out of nowhere. Like, I was fine all day. Hey, Mike, what are your thoughts on the real estate market? For Southwestern Ontario. So my short-term forecast is extremely bullish. Like, we're going straight up, parabolic, for again, 10% appreciation into the spring. It sucks to sell my properties off now. I've sold most of them off now. But we are for sure in London, Ontario, and Southwestern Ontario going through a major bull rush. There is an insane demand and not enough supply. So much money. It's making the market frothy as hell. It's only going to be exacerbated by a number of other factors that are driving things up. Number one, most important, being the fact that interest rates are going to rise next year. That's happening. Maybe in June, maybe in May, maybe in July. Sorry, Rogers is calling me, trying to win me back. Cancel on my rental properties. Lost my train of thought. Oh, real estate market. So I think we will be squeezed into a bit of an upwards, and then when the rates, first drop, we're going to go even further squeezed, like almost vertical on price curve, because everyone's going to want to lock in that 120-day hold and get their property at that low interest rate mortgage before it goes up. And you have 120 days once rates rise to lock in. So you lock in with the bank. Even though rates are up, you haven't felt any of that because you've locked in a rate before the rates went up. And so then you gotta go find a property. So it's a mad dash. All these investors have rate holds and rate locks, and they're running to go buy property. Well, they can use that in their 120 days. So what you tend to get is not enough supply because it's the middle of summer and a ton of demand. I think we're gonna have a huge peak, and then I think it's gonna be cooling off. As rates come up to stave off inflation, we should see the real price of real estate, net of inflation, potentially be negative, I think, looking into 2023, 2024. I don't know, I could be wrong, but I feel like we're extremely hot, straight up, and then a cooling off period coming. So could be a good time to buy now and ride it up a little bit further. Could also be a good time to sell. We're in a frothy time. Like some of the properties I have are not in the best shape. Like students have been in it for years and they're hard on it. Like I had nice, beautiful hardwood floors at one of my fanshawe rentals, and the students are running with shoes on it every day and they've worn it down. That would be a problem in a bear market. In this market, I put it up, it'll sell multiple offers way over asking. No one even cares they have to spend $5,000 to fix the floors. That's a nice thing about this market right now. So if you're looking to sell a portfolio, it's a good time. The important thing is, what do you do with that capital once you sell? Do you buy more properties? Do you buy in different locations? Do you buy into the stock market? Which stocks? All questions that I've been trying to answer. And I think it's important to keep the capital working, right? The velocity on the capital is important. And leverage is a big piece of why real estate is so awesome. Yeah, so hopefully that answered your question. Steven says, do you have a public REIT that you feel is a good, safe cash park to make an easy guaranteed income to balance things out? I have no picks right now as far as REITs, but you go like the top 5 REITs in Canada are all fine. If you're looking at like private REITs, like Centurion Private REIT is a decent one that invests in Southwestern Ontario. I think you have to be an accredited investor, but they're interesting. They pay like almost, I think like a 10% distribution, which is interesting, plus appreciation. So that's an interesting play. I don't know, it's something to look at. I'm not super bullish on investing in REITs, but it can make a lot of sense, especially if you're not interested in, if you're not interested in, the day-to-day or finding properties off market or just being involved in any way. It's a great passive way. Using interactive brokers, you could, in theory, lever that up. You could lever that position up. And even though they have mortgages and you're providing basically the equity to buy the properties, you could lever that position up even further by borrowing against your stock. You can borrow against your REIT stock in most cases, 2 and 3 to 1, depending on the REIT. And you borrow at like prime -1. So it's interesting to borrow against your portfolio. Steven says, Northeast Florida is not bad for hurricanes either by a percentage. New master plan community still being built in Nocatee, Florida. Looks awesome with great amenities and also best rated schools. Interesting. I'll have to send me a message on Instagram about that, and I'll have to put that on the list of places to check out. Yeah, that's all the questions. I'm cool to end this early. My throat's just killing me. Let's do like a 25-minute stream tonight, guys. I appreciate y'all tuning in. But yeah, let's end it early. That'd be great. You guys know where to find me on Instagram, Mike Rosehart, if you have any questions or want to follow me on the daily stories. I post like 6 to 8 times a day. And of course, every week, you can find me on YouTube every Wednesday from 7 to 8 p.m. Eastern. You can tune in around 7 p.m. I'm usually on. You can ask me whatever you want. And J. Doe says, do you have any properties for sale right now that you'd be open to offer a BTB on? I'd prefer to just sell and cash out, but all right, everyone. Thank you so much for watching. Remember, the secret to unlocking wealth through you is to spend less, earn more, and maximize returns on the difference. Have a good night, everyone, and we'll see you next week.